So this is where people can't believe the markets are rising because they know the economy is getting worse.
Okay.
Because the economy, what you're looking at is today's data. The macro world lives on forward looking. So you have to live in the future. So let's ask ourselves a simple question. Okay, there is a recession. We've broken Credit Suisse. We've broken Silicon Valley Bank. There's probably going to be a few more. What is the outcome? The outcome we know is with almost 100% certainty is rate cuts, and almost with 100% certainty is more monetary liquidity. Therefore, asset prices should start pricing in those things, because the biggest driver of returns since 2008, when everything changed, has been the balance sheets of the central banks, liquidity. So if you take, I use the G5, the balance sheets of the G5. So that's the ECB, the Fed, the Bank of England, Bank of Japan, People's Bank of China. You make a composite of that and map the S&P 500 against it. 97.5% correlation. It's basically the same thing. Now, when you look at that, you realize that now the S&P is basically a voting machine or a probability calculator to when is it coming and how big is it going to be in terms of liquidity. So that's why it's going up. Now, when it comes to assets, we know that certain assets do better in liquidity environments. So European equities have never been great because there's not a lot of investors left in Europe. The average person, even their pension funds, tend to own more bonds than they own equity. So it's not a big investing culture, stock market culture.
Yeah.
But the US is. What we find is that, generally speaking, the S&P 500 does pretty well. Technology stocks, gold does okay. Technology stocks do really well, and crypto does ridiculously well. And why is that? It's because really economic growth is not high enough to sustain ongoing high equity prices, which is what's happened in Europe. In the US, it's optically looks like they're going higher, but it's actually to do with the reserve currency of the world being debased. So when you divide the S&P by the Fed balance sheet, it's gone nowhere. It looks like the European stock market. It's gone nowhere in 20 years. But crypto and technology do beat that debasement of currency, and it's because they're secular trends driven by adoption of technologies.